back to another episode of Medical Money, the podcast where we help you healthcare professionals learn finance and money. I am Kirk Roberts. I'm an ER nurse and also financial educator, as well as a licensed financial representative.
And I'm Ben Chandia, firefighter, advanced CMT, also licensed financial representative. And we're here to help you guys figure out this money deal in this high stress environment that we all work in.
Guys, today's actually the topic is financial terms that you should know about finance and money. Now, some of these terms will have their own podcast. We're going to actually drill down deeper into them and explain them even better. But today's podcast is to give you simplified terms that you should know.
Yeah, and also what we're gonna do is on our YouTube channel, okay, in the notes section right above the comments, please like, share, comment. But in the notes section, we're gonna have a PDF that also outlines all of these terms for you, so you can come back and have that reference for you.
Okay, guys, let's just jump right into it. We're going to talk about money basics, and these are terms that you've probably heard all over the place. But what do they mean? So the first one, net worth. Net worth is what you own minus what you owe. Make sense? Next one, income. Money that's coming in, however it is, whether it's money you earn. So it could be passive income, it could be active income. Gross income is income that you do before taxes. When someone says, what's your gross income? That's it, income before taxes. Net income is income that you have that they take out the taxes, and that's the remaining amount. So income after taxes, or your home pay. Budget, it's a monthly plan for your money. And we will definitely be drilling down on this one in a future podcast because it's one of the financial house things that Ben was talking about earlier about your financial house. Savings, money that you don't spend. That easy. Spending, money you use to buy things. Okay. Fixed expenses are they're expenses like rent that are the same every month. So it's expenses that are the same every single month. Versus variable expenses. And these are expenses that change every month, like gas, food, stuff like that. Now, you ever heard the concept of living paycheck to paycheck? That's when all of your income is spent each month. Some people use it as too much month at the end of the money, right? Okay, emergency fund. And that's money that's saved up for unexpected problems. Definitely another podcast that we will be going over, okay? Now, here's one that's a little bit special, but needs versus wants. Needs are must have. Wants are would be nice to have. All right, cost of living. How much does it cost to live in one place? In other words, the housing, food, electricity, utilities, all that, that's the cost of living wherever you're located. Okay, lifestyle creep. This is spending more as you earn more. And that's actually a macroeconomics term where the more that you're earning, the more you're spending. That's called lifestyle creep. Next, pay yourself first. This is actually something we're huge into is you actually have to have some money that you're putting away. So you need to pay yourself first. So you save before you spend. Definitely we'll be going over this in another podcast as well. All right, financial goals. And these are also kind of concurrent with financial objectives. So these are, what do you want your money to do for you? And we will actually be doing a specific podcast directly on financial objectives. Next, delayed gratification. That's waiting to enjoy something until later. All right, next one is impulse buying. And I know a lot of people are guilty of this, which is buying without planning, just spontaneously purchasing things. Next, and this is a huge one for us, cash flow, which is money in, money out. That's basically what it is. Now, financial literacy. This is understanding how money works, guys. And that's the basic term. That's why we're doing this podcast, to give you that financial literacy.
100%, Kirk. And, along with that, it's very important to know your banking and cash terms too. Okay. So some of those are going to include like a checking account, right? That's money whenever you get paid, it goes to the checking account, typically speaking, right? And that's money going out for bills, paying things off. Okay. Your savings account, this is going to be for a short-term goal, right? Maybe within a year, something like that, saving up for Christmas. High yield savings account, okay? These are a savings account, but with a little bit better interest rate on that, right? Versus your 0.0% that you typically get. You have overdrafts, right? This is when you spend too much and you just don't have the money, right? you're just in the negative. Okay, then you get charged from your bank an overdraft fee typically on that. You have direct deposits. Okay, this is set up at work, and that's whenever you get your check, your pay, that goes directly to your checking account. Okay, versus unless you're old school and you want a physical check. You have your ATM fees, right? Whenever you use an ATM, there's usually a charge for the use of that machine. Your bank statements are when you get a statement from your bank. How much have you spent? What's your spending habits like? Now, you have a routing number. This is going to be very specific for each bank. Each bank is going to have its own routing number. That's just an identity number for that bank. But then you also have an account number. Okay, your account number is specific to you and whatever accounts you have. Your FDIC insurance, right? This is something set up with the government that insures your money. It was created after the Great Depression, and your money is insured up to $250,000. Okay, and this is usually if a bank goes insolvent or goes out. Okay, it's to help protect your money. You have mobile banking. This is becoming more and more popular, but this is managing your money from your phone. Okay, you're on the go. You have your debit card. This is where you're spending your own money directly to whatever you're buying. Then you also have a credit card. A credit card is borrowing money to spend elsewhere. You also have cash back rewards. Right? This is usually with a credit card, but if you're spending that money, usually there's an incentive to use that borrowed money, whether that's cash back, miles for travel. There's a whole bunch of different rewards with that. And then you have your prepaid card. This is when if you have a certain amount of money, you want to put it onto a card, then you load that card up and now you have that money on that card.
So let's drill down a little bit deeper, and these are the next financial terms on credit, because Ben was talking about credit cards and now we use them. So credit, this is borrowed money. You don't have this money. You are borrowing this money, right? And then later paying interest. And we definitely have a whole podcast on interest as well. Debt. Debt is money you owe. It could be for whatever. If you owe money, that is debt. Now, there is good debt and bad debt, and we'll get back to that. All right, next one is interest. Like I said before, we're gonna have a full podcast on this. This is the cost of money. That's what this basically means. Now, whenever anyone says principal, principal is the original amount that you borrow. So if you borrowed $10,000, the principal is $10,000. All right, APR, you'll hear this a lot, which is annual percentage rate, which means what's the total cost of borrowing money in that year? Okay, so the APR, annual percentage rate. Next one, credit score. This is your financial trust score. And we'll do a full podcast on the credit score. And that actually leads us to the next one, which is credit report. This is the history of your credit utilization, which then brings us to the next one, which is credit limit. What's the max that you can borrow on a credit card or a loan? Next one is credit utilization. And this basically means how much of your credit are you using? Are you using 100% of your credit? Or using 30%, we'll also be going over this in extensive detail. So credit utilization is how much credit are you using? Now, if you don't pay on time, there's something called late fee. So this is a fee that is charged to you when you miss a date for a due date of paying back your credit card. Now, typically that's the next term, which is minimum payment. Minimum payment is the smallest amount due or the required amount due on a credit card or a loan to have starting to pay it back. Debt to income ratio. This is your debt divided by your income. And a lot of the times, and we'll go over this in detail, it's a lot of how you can get even more credit in the future. Refinancing. So the terms of a loan are actually then are modified. So it's getting a new loan with better terms. So you already have a loan, you refinance it to get better terms. That's what refinancing means. Now, consolidation, that means taking multiple debts and consolidating them into one. And we will definitely be going over that. And I know a lot of nurses do debt consolidation. And there's lots of platforms out there on the internet saying, financially free nurses, come, let's do these things. We'll be discussing this. Now, default. If you don't pay back the loan, you are in default. And that does affect you financially.
Yeah. And, we're talking, Kirk, you're talking about credit and borrowing money, a lot of these things. Let's start switching gears a little bit and talk about investing, right? Me and Kirk, we're both very passionate about investments. All of these terms, we're going to have a lot of episodes about these. We're very passionate about this subject, and want you guys to be passionate about it as well. All right, so the first topic is assets. All right, this is something that makes you money. It's not something you own, it's something that makes you money. Okay, you have a liability. This is something that costs you money, right? The opposite, asset, liability. Next, you have stock. This is when you own a portion of a company, right? Then you have a bond. This is when you are lending your money out and they're paying you interest. Okay, kind of an interesting concept. Then you have mutual funds. This is where you have a group of investments, whether sometimes that's a mixture of stocks and bonds, but you have a group of investments all piled together that you're investing in. Index fund. This is a kind of like a mutual fund, but this is going to be more to follow a certain index. Okay, like the S&P 500, Dow Jones Industrial, the Nasdaq. There's a bunch of different indexes out there. Then you have an ETF, or an exchange traded fund. Okay, this is kind of like a mutual fund, but trades more like a stock. Okay? Then you have diversification. This is very important to remember. Just to remember, you don't want to have all your eggs in one basket. Okay, you want to have them spread out. Compound interest. This is interest earning interest. We're definitely going to have a podcast on this.
Favorite topic.
Love it. Then you have dividends. This is when a piece of a company's profit is shared with you, right? And you make money off of what that company's doing. Then you have capital gains. This is profit from selling an investment, right? If an investment has done very well, that's what your capital gain is. Then you have risk tolerance. We're going to have a full episode on this one. This is how much risk you're okay taking on. Okay, what kind of roller coaster are you looking to get on? Okay, look forward to that one. Then you have your portfolio. This is all of your investments compiled together. Okay, whether that's crypto, gold, mutual funds, stocks, whatever it is, it's all put together. That's your portfolio. Now you have some things that are coming out, more and more popular, but you have these robo-advisors. These are basically automated investment help. Okay, especially with AI coming out, things like that. These are becoming more and more popular, and we're going to talk about this in the future. You have brokerage accounts. Okay, these are accounts you set up for more of a medium type investment. Okay, not necessarily for retirement. We're going to talk about this for sure in the future. Now you have your bull market, okay, and then you have your bear market. Two terms are very important. Okay, the easy way to remember it is the bull, right? The horns attack up, and the bear claws come down. Okay, so in a bull market, the market is going up. We have growth, we have appreciation, we're going up in the market. Then you have a bear market. Okay, this is when things start coming down. Okay, you start seeing a lot of the red, right? Both are very important to know, and we're definitely going to talk about this. You have your time horizon. Okay, this is how long you have until you need to utilize your investment. Okay, whether that's retirement, same for college. What's the time frame that we're looking at? Then you have your asset allocation. Okay, this is dividing your money up into different types of investment. Okay, where is your money allocated in? And then you have our favorite topic, dollar cost average. This is a strategy used, for a lot of people use it, of having a certain amount of money invested in regularly. That's the key point. Regular investments into, or paying into an investment regularly.
Great. And then talking about investing, now we kind of transition a little bit into retirement planning, which is kind of the whole purpose behind people like, I want to set up my retirement. Yep. So let's talk about retirement planning terms that you should know. Now, 401k. This is a job-sponsored retirement account, okay? Just like the 403b, which is also like a 401k, but it's used for like hospitals and schools. The next one is a Roth IRA, personal favorite.
Love it.
Because this is a retirement account where you pay the taxes now, and as you grow, it becomes tax-free. We will definitely be going over this one. All right, traditional IRA or individual retirement account is you pay the taxes later, in other words, tax deferred, and then when you take the money out, that's when you pay your taxes, okay? Next one is a pension. This is a retirement income from your job. I'll tell you right now, this is going away. Pensions are almost non-existent anymore. We'll explain more in the future when we talk about retirement plans. Annuity. An annuity is guaranteed income for life. Doesn't that sound great? Now, this is an insurance product, but this is actually something where someone wants guaranteed income. So annuity means guaranteed income for life. Next one is vesting. And when someone says you're vested, that means your retirement benefits are officially yours. Many companies say, and maybe it's 1, 2, 3, 5, 10 years until you're vested. So in other words, you don't own that money until that time comes. Next one is contribution limit. You can't just dump money everywhere. You have to have, there's limits that the government puts on us. Now, these contribution limits are the max you can put into a retirement account every year. Okay, we'll definitely be going over this. Yeah. Next one is actually a little bit of a strange term, but it's very, very important, especially as you get older, which is RMD, which stands for Required Minimum Distribution. Now, this is the minimum that you must take out of your retirement accounts after a certain age. And if you don't, you get penalized. That seems weird.
Yeah.
All right. Next one, Social Security, right? Which is a monthly check from the government after retirement. We will be going over this in very big detail to help you understand it as well.
Yeah. No, 100%. Another thing that a lot of people talk about, Kirk, is, and very popular now, real estate. Right, real estate, and I mean, really, that's kind of the American dream, is to own a home someday. So let's talk about some of these terms. One, you have a mortgage. Okay, a mortgage is basically a loan to buy your house. Okay, which is going to have interest associated with it, things like that. Then you have a down payment. This is money needed or required to put down towards that loan. Right, and there's different reasons why you have to do that. Then you have escrow. This is a separate account, typically for your holding taxes and your insurance. Okay, you have your escrow account. Then you have property taxes. I love paying taxes, apparently. You have to pay taxes on the property that you own. You have your home equity. This is the value of your home. Right, so the longer you've been in your home, typically the more equity has been built up, and that increases the value of your home. Then you have an appraisal. Okay, this is when a professional, usually a third-party company, comes in, appraises your home to see what the current value is. So it's an official, indicator of what your home is worth. Then you have your closing costs. Okay, these are fees that you pay when you close on your home. Okay, when you sign on the dotted line, boom, there's your closing costs. Now, not everyone has these. Some places are going to have this, but an HOA fee. Okay, HOA fees usually are something that you pay to the community, to a neighborhood, and that helps pay for upkeep of your property, right? Mowing the lawn, removing snow, salting the driveway, things like that. Okay. Then you have renting versus owning. Okay, renting, you're paying to use that. Owning is you're building equity. Right? You have two ends of that. And then you have a real estate agent, okay? This is someone who's going to help you find and purchase a home, okay? Or if you're looking to move, you have a home, your real estate agent is going to help you sell that home.
All right. Let's talk about the subject that I do detest more than life, but it is what it is, because there's two things in life that are sure: death and taxes. All right. So let's talk about taxes and inflation and legal terms that you should know. First one, inflation. When people say, oh, inflation, what does that mean? Prices go up over time. That's what that means. Deflation is the reverse. Prices go down over time. So a tax deduction, and I hear people saying this all the time, it's a tax deduction. Okay, do you even know what you're talking about? So a tax deduction, in the simple terms, lowers the income you pay on your taxes. We will definitely be going over this in the future. Now, tax credit. This is something that directly reduces your tax bill, and that's called a tax credit. Now, a W-2. This is the tax form for employees. So when you actually have to report your taxes, you receive a W-2. We will definitely be going over this when we go over the job status in something called the cash flow quadrant. All right. A 1099 is a tax form for people who own businesses, independent contractors, and freelance people, contract work. This is actually the golden goose, and we will definitely be going over this as well. All right, next one is filing status. And this is actually part of how, when you do your taxes, how are you filing? So it's basically, are you filing your taxes as like a single, head of household, married, filing joint, married, filing singly. We will definitely go over that. And we actually have some tax experts that are going to come onto the show and help us to explain these a little bit better. We also have something called withholding. Now, withholding is money that's taken out from your paycheck to pay for taxes. This is typically done in something called a W-4. And we're going to actually go over the W-4 in detail because you have to fill this out when you get a job. You fill out a W-4. So that's part of your withholdings. So money taken from your paycheck every month for taxes. Now, the IRS, which controls all things taxes, can do something called an audit. An audit is the IRS is actually checking your tax return, and then you're going to have to prove what's going on with your money. Now, the last one I have here is estate planning. Now, that is the legal plan for all your stuff when you die. What happens? Okay. So anyways, these are the terms that we thought you should know. And like Ben said, we're actually going to put it down on PDF so you can actually look at these terms. Many of these terms we will drill down for it even more, and so you can understand it.
Thank you guys for joining us today. Remember to subscribe and share to this, and share it with your friends. Share it with your fellow healthcare professionals and coworkers, right? You guys may be great at saving lives, but are you great at saving your own life financially? Okay. If you guys have any questions, comments, please remember to email us anything to medicalmoneycash@gmail.com. Thanks for joining us, guys.
Okay, we'll see you.
I'm looking for a man in finance. Trust fund. 6'5", blue eyes. Finance. Trust fund. 6'5", blue eyes.